It is Monday, March 10th. I am back. Thank you for all the thoughts and prayers on Dad. He went through fine. Everything is okay. He had a catheter test to test that they can replace a valve. He's 83 years old, so can't do the old way of just breaking open your chest and getting it out, blah, blah, blah. But we got a lot to go over. We're going to go over the VIX, the 10-year. We're going to go over all the signs. Don't fight the Fed. We'll go over the Trump tariffs. We'll go over earnings. We will go over some strategies. Costco, Tesla, Meta, Microsoft, Redfin made a big purchase. Coinbase. By the way, the Redfin stuff, you can buy. I mean, it is what it is. ServiceNow, CRDO. Crypto, and for paid members of the newsletter, I'm going to go over 10 stocks from Morningstar. I will go over Oracle, and I will go over another big name that I think has opportunity with earnings this week, and a strategy for it. And we'll go over Broadcom as well, because I think there's a good strategy with that one. So, I got 10 prompts on AI to use AI as a stock analyst. I may do that one today, may do that one tomorrow. It might be a little bit too long for a podcast, but let's just say while I was on vacation, I went to the dark side. Okay. And if you go to the link tree, I put it up there and I put it up top. They got me. Robinhood got me. So if you want to join me, I put $500 into Robinhood. It is now worth $490 with the pullback because I just bought VOO. And yes, I bought VOO. 100% VOO. Do I have any cash in Robinhood? No, it's all VOO. It was $500. The reason I got into it is I got some free stocks. Again, free stocks, you get $500 to $200 worth of fractional shares. When you sign up, when you use my link, it's just like Webull. So far, I have not loved Robinhood, but the reason I got it was I loved this game, HQ Trivia, and they brought it back for 2 days. And so I got it. I'm in it. I've got $500. We'll see if it takes me 21 days to actually get my $500 out, but I'm in it. You can sign up on the top link right there. Okay. So let's go over what's going on with the markets right now. Okay. It's bad. It's bad. It feels horrible. On Wednesday, I said, I don't think that we're done going down. And we weren't done going down. We've gone down even further. That green line right there, that is on a weekly candle. Okay, that is on a weekly candle. And we've touched it on a weekly candle. We're going to touch it. It is down there around 486 right now on the Qs. You're at 484. So the MACD isn't going down fast enough. Okay, on the weekly, you've just got 2 weeks. You're below the 9-day. You're not even at the 50-day yet. Probably today, you're going to open up under the 50-day on the weekly. The daily looks like crap. We couldn't hold the 200. Where are we going down past that? That green line still stays there. And you can see the daily, it held the green line on Friday. Didn't hold it today. It's going to pass through it. And so does that mean disaster? Well, it might mean that we're going down to 440. How low is 440? That's another 10% down from here. So there might be more pain. There very likely is more pain. And even if you go to SPY and you look at these things, and we'll go over support levels, we'll go over all of that. I'm going over this free form. I will go over my notes as well. But look, SPY does not look good. The 4-hour algorithm had you out. Again, if you're not using a strategy to manage positions, make sure you have a strategy. One of the strategies that I use is the 4-hour algorithm in Trendspider. It takes emotions out of it. So am I selling in and out of my QQQ positions when the 4-hour algorithm tells me to get the hell out? No, I'm not. I'm using the 4-hour algorithm to get in. But if I have a long-term position that is up significantly and the 4-hour algorithm tells me to get out and the weekly is losing confirmation, then yes, I am using that to trim. I am not getting out of my position. I've said it many times before. Time in this market beats timing the market. And when you look at Ryan has been completely right. He said in the middle of February The back end of February is typically very weak. And he pointed that out over the past 20 years. Peaks in mid-February and lows in the second week of March are common. They're common. They're super. This is the past 20 years. Okay? Look at that. Over the past 20 years, you're seeing this is normal. Now, what's not normal is the tariff war. And that's where we're going to talk about right now. This is one of the favorite charts in Ritz-Holtz Wealth colors. We've seen 91 sell-offs of 5% or more in the S&P since 1950. About a third of those are blips on the radar. Drops smaller than 10% are less than a month. Time in the market beats timing the market. So now you go over to Seeking Alpha. Let's go over to Seeking Alpha right here before we do the promos. But the VIX, it's 26. I said it wants to live at 20. It will. It will. It wants to live at 20. These blips, look at this one. Back here in December 17th, this one, it went all the way up to, let's see, 27. We're at 26 right now. If you look at one day, we're just continuing to shoot. The sell-off continues. I told you the VIX was a key. As you start to see this one rising, then we can start to see opportunities. Well, what do we see? You can use UVIXY and XVIXY. These are triple leveraged ETFs on the VIX. This is the ultra short VIX. Okay, this is UVIXY. So as the VIX goes up, this one goes up. So this is the short, and this is the SVIXY. SVIXY is the other one. Short-term futures. So you can use those to track the VIX. Those are two opportunities to try and make some short-term wins. It's not a bad idea. Then you take the market data and you go and you look at the bonds. Okay, this 10-year right here, US 10-year. I said at the beginning of the year, if we are closer to 3%, that's a problem. Okay, 4.25%. 1 month ago, this was at 4.5. 3 months ago, when we were down, it was 4.17. 6 months ago, it was 3.71. If we go back to 3, it's a problem. I don't know the whole explanation behind why it's a problem. I just know it's a problem. I am not a bonds expert, but I know what to look for and I know where to go. And if this is going to go down, and we can look at the trajectory of this one, you can see it's going down as the market's going down with it. So you want to keep an eye on these things. And if you're losing sleep at night, okay, Dan Niles has why I expect a near-term rally given some of the oversold levels reached intraday last week. Q1 reporting season is likely to be challenging. He goes over everything. How he doesn't like the Mag 7. Tom Lee is not the only one. Okay, this market particularly feels like 2021 going into 2022. And if we go back and we look, we'll look at VOO and we'll look at a monthly chart. Okay, because a monthly will tell you exactly what I saw. This is December 2021. This is what all of 2022 felt like. Tom Lee was telling you, buy the dip, buy the dip. There were others like Dan Niles who were out there saying, don't buy the dip. It's not done yet. We're seeing the Fed raise rate. Don't fight the Feds. Dan Niles, he has called it perfectly. He's been super consistent. It's not just Tom Lee that you want to listen to. Tom Lee is a very long-term investor. He is a perma bull like me. I'm aligned with Tom Lee. But there are other people out there. I'm a buy and hold guy. I tend to be much more, hey, I'm going to buy while it's going down and wait it out. That has worked out for me over almost 40 years of investing. I'm a buy and hold guy. I'm not the guy that says, hey, protect your capital, buy TLT. I am not that guy. I very rarely look at the short term. I look at the long term. So for me, this chart of 2022 was an opportunity to trim some and buy back in at lower rates. That's what I'm seeing. Look at this monthly chart. Where was how long did this take to correct? Meanwhile, I don't think it's going to take that long to correct. I do think as you get down here to somewhere in the neighborhood of 19 or 20, remember you're 40 points above the oscillator on the MACD. Your RSI on a monthly is at 63. You're overbought. You're still overbought. And when you look at a daily, it looks like we're oversold. It looked like you could bounce. Where's your support levels? Well, your 200-day is your ultimate support because we haven't sold on the daily on the Qs under the 200-day since October 2023. And we're back there. And if you pull this back to the last time, this volume levels, the last time we sold under the 200-day and saw a bounce, where's your volume levels? Well, you're seeing some at 519. You're at 522 right now. You're also seeing some at 503. I would expect you to come down to 500. And why am I saying 500? When you look at this little chart right here, and we're seeing, where did this one start to pop? Well, the high right here is 491. I would expect 500 to be the next leg down. Oh, this is VOO. So this is VOO. But I would expect that to be the next leg down. And I think this particular one, what is this, risk reversal? This is Guy Adami and Dan Nathanson. These are the two biggest bears on CNBC. And they call for doom and gloom all the time. He's saying the S&P will get down to 5,700, which means, let's see, let me see my notes. 5,700 on the S&P, which means 570 on SPY. SPY right now in pre-market is trading at 567. And the reason he says that's where it is if you go and you look at November 4th, this candle, what's the low on it? That was the election week. The low was 567. Now, I would argue you still have room to go down. And I would argue that 511 is probably your biggest support, which is the bottom of that time. Let's pull this. We're going to pull this volume indicator back. And we're going to look at the October 2023 lows, just like we did on VOO. Where are we seeing support levels? We're seeing them right here at 540, 548. So if you start buying at 570, don't go balls deep. Don't go balls deep. Just listen to the people that are telling you where the market is at and where it might be going. And then make your determination. Ryan, again, not all bull markets make it to the third year, but when they do, it's perfectly normal to see some chop and frustration. So you're going to see volatility. We've been talking about that the whole time. And I posted this chart, Trump tariffs 2.0 versus 1.0, okay? The best predictor of the future is the past. Trump tariffs 2.0. This is the market during this time. Okay, the red line, that's now. And you see it down here. Trump 1.0, which was, I think, 2018, where it was a tariff war. This is what happened. And so could we see a bump? Absolutely. And then you see it get taken back down. This is what I predict it will happen. And this is a great chart. It comes from the Kobeshi letter. Okay. The first Trump tariff war proved to be an exceptional buying opportunity as shown below by Zero Hedge. Markets are trading on nearly the same exact route. Are you buying the dip in Trump 2.0? My answer is I'm buying the dip. Am I going balls deep? Absolutely not. I didn't go balls deep the last time. I bought on the way down. Stair step. When you go, say you're going down a flight of stairs. Do you jump the entire flight of stairs or you take it one step at a time? Take it one step at a time. Even on the way up, you take it one step at a time. That's the way you do this. I said it back in January. All of this tariffs talk, but when it started, we're going to see some volatility. Okay? Don't fight the Fed. It's now don't fight Trump. He basically admitted this weekend that he expects a recession and a slowdown. He wants interest rates down. It's not about the market. He wants interest rates down. How does he get interest rates down? He tanks the economy. Okay, he's going after the Fed. He knows when he tells Jerome Powell, I want interest rates down, he made that clear. They didn't lower interest rates. He's trying to force them to lower interest rates. He's a real estate guy, loves low interest rates. He's trying to slow down the economy. And he had his administration out there fighting the media the entire first 4 weeks of this, saying tariffs aren't a bad thing. They're good. Now the market's tanked. What's he saying? Well, there's going to be some pain. This was planned. And stock index futures trade lower as concerns about the economy grow. It is all about the tariffs. It's no longer don't fight the Fed. So where are we going now? You need to have multiple days up. You can't have a small rally on one day and then just have it all taken back the next day. You need multiple days of up. We had great earnings from Broadcom, down 2%. From Okta, which was down. CrowdStrike. All of those great earnings failed. The rallies failed. In fact, Broadcom, which I'm going to go over for the paid members, I'll just tell you, this one was up over 200 post earnings. It couldn't hold it. It just couldn't hold it. Here's Broadcom right here. 4-hour algorithm got you in at 195 on Friday. It's trading at 190. Would I be buying right now at the 184 level? Absolutely, I think. Remember, I've held this stock. It was fantastic earnings, and it couldn't hold it. So I do think that we look at these earnings, which couldn't hold it, and we say, you know what? If it's a good stock with a good profits, good management, good product, you buy it. Stephanie Link, challenging week, but making a list of the companies that reported strong earnings per share with going higher. That got caught up in the overall sell. This is sentiment. This is momentum. This is Broadcom. This is Wells Fargo. This is Gap. This is FANG. This is Snow. This is IBM. This is Levi Strauss, ETN, and 3M. All of them, she's buying. So now if a good trading strategy isn't about just the entries. It's about knowing when to stay out. And the QQQ super trend, it has you out. And this is on a 30-minute candle. It's crushed buy and hold over the last 3 years. Okay? 56% versus 48%. You can import this strategy into your Trendspider setup. Again, if you're worried about the stocks that you're losing on, find a strategy that works. This is all about technicals. This is momentum in the stock market. It's clear. Earnings aren't driving stocks up. It's clear. This is sentiment. So what you want to do, maybe try this QQQ 30-minute super trend scalper. 56% versus buy and hold over the last 3 years, 37%. 48% win rate. Okay, so your risk-reward ratio, 1.61. You basically import this into your setup and you can have it in Trendspider. Okay, and it's super, super simple. And this is all you do. This is all you do for everything that you need to import. Okay, we're going to look at the QQQ 30-minute super trend. And we're going to go back over here and we're going to click to open it. And we're going to go back to QQQ. Look at that. Let's see, QQQ super trend strategy. We're going to look at QQQ super. Where is it? I can't find it. There it is. QQQ 30-minute. So we're going to run this. And we're going to see how this works. Well, yeah. Look, it has you out right here. Has you out right here with a 0.5%. It hasn't gotten you back in. Will it get you back in? That's for you. You know, it's 932 and we're seeing a red candle right here. You got a nice gap up to 499. You're 481. Could this be the strategy that you want? It could be. You have to import it into your setup, okay? Now, if you want Trendspider and you don't have it, go over to Linktree. The link is down below, linktr.ee/dailystockpick. It's the second link because the first one's Robinhood. And you get to hear, you can try this one for $9, okay? For 2 weeks, you get it for $9. And import this into your setup. Import it into your setup and try it. Okay, it's nice and easy to do. And that's as simple as it gets. Find a strategy that works. This is one. This is a RSP, relative performance, 30-day high. Okay, import it. Log in and import. We're going to look at this one. We're going to subscribe to it. And we're going to go over here and we're going to look at this scan. Click here to open it. And we're going to look at all of these, the RP, relative performance, 30-day high. Okay, AWK, which is American Waterworks. Boy, look at that chart. You know, we can put this into the 4-hour algorithm right here. We go into the 4-hour algorithm, and does it perform well? Let's see. Minus 4% versus 2.1? No. But boy, look at that one. 123 and you're 140%. This is ConAgra Brands. Nice gap up here to 32, and it has you in at 24, and boy, it's trading at 28. Hershey's. Boy, this one had a nice little turnaround here. At 153, it got you in. Couple gaps up here. It's filled those. So find a strategy that offers you opportunity, okay? BJ's Wholesale. Look at this one versus Costco. The 4-hour algorithm makes you 33%. Buy and hold makes you 57%. It just got you in at 111. And if we look at this one on a weekly, it's been soaring. So find a strategy using Trendspider. I love this program. It's one of my core that I can't get rid of. So I love it. So import the strategies, understand what you're looking for, and find some winners. One of the winners of recent is Costco. And we can look at this one. Costco, trailing PE 58 times, year-to-date performance, plus 5.99%. Again, look at that. Then you got BJ's. Costco, are you willing to pay 64 times forward earnings? 64 times forward earnings with an 8% growth. Or do you want BJ's? We just looked at BJ's. The valuation gap performance, again, which one do you want? Find the two with Trendspider. Now let's talk about Tesla. Fading worries over Doge and Elon Musk. Wedbush goes all in on Tesla. I go back to what I pointed out about Chris Camillo. Tesla is going to be a robotics company. And this is a great time to get this one on sale. Is it time to get in? Well, no. The 4-hour algorithm blows away buy and hold. Okay? Did I sell the portion that I bought at 220? No, I haven't. I'm still holding it. It's $500. It's not a lot of money. I own this in XLY, but I will be adding to my position as the 4-hour algorithm gets me in. I picked this one as one of the year's big winners. And boy, was I wrong. But I do believe in this one long term. And you look, it is beaten down below the MACD. The valuation's crazy. Wedbush says this is still one of the best stocks that you can buy for the long term. Okay? The valuation is getting better. Remember this forward PE that was like 400 when it was trading at 400? It's now down to 92. They're not growing, but as you get the robotics in there, it will start to grow. It's just right now it's being valued as a car company, and Elon with his political endeavors is just not doing the stock any favors. But the 4-hour algorithm, you can see it right down here on the screen, 148% versus 25% if you buy and hold. Over 24 months, there's 23 positions, and you can see it got you out here at 332. When you bought it 351. So it protects you on the downside. Again, find a strategy that works. And Tesla is one that I will be putting more money into. I have a strategy on that one. Meta. I love this go, no go indicator. Lost key trend line support today with the go, no go, telling you no go. Even the strongest Mag 7 name this year is starting to crack. It told you don't go. Okay, that's the go, no go indicator on Trendspider. And if we go and look at Meta today, where is it? It's down 3%. Remember how I told you to get this under $700 when you could? Well, wait for the 4-hour algorithm. The 4-hour algorithm makes you 150%. Buy and hold makes you 250%. But the win percentage on the 4-hour algorithm is 59% in this name. 59% win rate. 22 positions. That's very, very good. Again, we're just covering this gap. down here to 590. If you can get it under 600, buy it. This one is not overextended. Okay, Meta. Again, I love this go no go indicator. I have it on one of my workstations, and I love it. It tells you when to buy. And between the 4-hour algorithm, go no go, and all of the other indicators that you have in Trendspider, you can find a strategy that works for every stock for you. Find one technical strategy that works. It saves you from times like this where it goes down. Another part of Trendspider, Microsoft is entering its 4-week stretch of seasonality just as price finds support at a key level. It's about 400. Meanwhile, it's trading at its all-time lowest PE valuation since the October 2023 bottom. Is it a perfect storm? I don't believe in Microsoft as much as I believe in Tesla. I believe that this one, over the long term, will absolutely come up and fill this gap to 440. So if you want to buy at 385, I don't think it's a bad time. If we go over here to what's happening now and we Congress trading, we look at Josh Gottenheimer. He just bought $1 million to $5 million worth of Microsoft. Okay, where the one that I'm highlighting right here. Okay, this is a political trading. You can track this. He just bought $1 million to $5 million on March 6th. He announced it. Okay, the transaction date, February 14th. Well, let's go over here to the 4-hour algorithm. And if he bought on February 14th, $1 million to $5 million worth on February 14th. February 14th is right here. I think he's got my 4-hour algorithm because it started to gain traction right there. But February 14th, he thought it was going to fill this gap. Did he sell it? We don't know. He hasn't, told us that he sold it. So he's in there at about $400. And you're going to worry about $385 to $400 with your $1,000 buy-in when he's spending $1 million to $5 million. He's one of the greatest traders in the U.S. Congress. He knows something. There's something that he knows. These guys don't trade just to trade. They trade on insider knowledge. That's my belief. So again, the seasonality of this, we can go and look at this. Let's look at the seasonality of Microsoft. We can go back. You know what? We're not going to go back 10 years. We're going to go back all the way to 2006. Okay. The week of the year. Look at this. We're coming off the worst weeks right there into some of the best weeks. So is this a buying opportunity? Maybe. You might cover this gap all the way to 440. I don't know what the catalyst is going to be. But again, the best weeks seasonally. It's never perfect. You're never going to time this one perfect. Microsoft, for me, is a long-term buy and hold. Why? When I look at this weekly, we are at the bottom of this level. Am I adding to this? I already have enough. Should have sold at the top. Trimmed a little bit, not enough. Not enough to think, okay, I'm going to buy more down here. There are other stocks that I want. And one of them, maybe Redfin. Rocket agrees to buy Redfin for $1.75 billion. This is at a $10, I think it's $12. Yeah, the online lending platform will pay $12.50 per Redfin share in an all-stock transaction. So you get Rocket Mortgage at $12.50. Your Redfin is worth $12.50, and you'll get Rocket Mortgage, I believe. Each share of Redfin common stock will be exchanged for a fixed ratio of 0.7926 shares of Rocket. You're going to have to do the math, but it's $12.50 of what Rocket is trading at. You can find opportunities in this market. Again, wait for it to dip because it's dipped down because Redfin was trading at $10.50. It's now down at $9.84. Wait for it to find, again, a strategy. Coinbase. Everybody thought that this one was going to get included into the S&P. It's now down 5%. Let's see. Let's see that. It's it's down 6%. Sorry, it's down 6%. It didn't get included. You want to know what did get included? Let's see. What did get included was DoorDash, TKO, Williams Sonoma, and Expand Energy will join the S&P. That's AppLovin was down 6% because it didn't get included. So again, it's sentiment, it's news. There is not a lot of good news in the market. The biggest stock movers on Monday, Checkpoint Therapeutics up 66% after India's Sun Pharmaceuticals announced the acquisition offering $4.10. Checkpoint's up 66%. DoorDash is up 6% because they got included. Bitcoin dropped 81K, pressuring crypto stocks. It's because Trump's Bitcoin reserve plan failed to boost sentiment. Rocket Company shares plunged after announcing their purchase. Again, there's movers in this market. Now, one that I really like, and I've said that I like it, ServiceNow nears its largest acquisition or offer. So they're going to buy this MoveWorks deal, $3 billion. And ServiceNow is paying $3 billion for this. And so it's going to take that down because they're spending money. But I do think that this is a great purchase. It's AI agents is what they're buying. And you can see after good earnings last time, they have failed to hold it. Go and look at this stock in the quant. It's a buy. Why? The valuation's a bit expensive. But if they're buying a company and they're going to use AI agents and boost subscriptions and boost revenue, that's going to be good because their growth is still really good. Now, the momentum sucks. 3 months, down 24%. These are the times that you want to buy. You want to find a strategy that works for this. The 4-hour algorithm right now, it makes you 14% versus buy and hold makes you 95%. I would be looking at on a weekly, this one under the 50-day. The last time this happened was right here around June, where it dipped down and it continued up. I think you're looking at more room up. On a weekly, this one, the RSI is at 35. It is completely oversold. Again, you have to be comfortable holding an expensive stock. Now, I'm getting a lot of questions from people about CRDO. Should you buy? Well, CRDO, let me just refresh this so I can see. In CRDO, in the market right now, it's down 5%. Udom Day, who I follow on Seeking Alpha, does a great job of telling you it's a buy. Okay, it's a buy. This was March 9th. He's been a buy since December 15th. He is down 45% in this stock. This is the number one stock from Seeking Alpha. He gives you a great outline as to why to buy this one. We'll go and take a look at it. It's a strong buy in the quant. The valuation, it's not expensive. I mean, compared to its peers, we can analyze this with AI. Let's look at this. This was written on 3/9, right after their earnings. Valuation presents a challenging valuation. For instance, its price to sales is 22, significantly higher than the sector of medium of 3, indicating a very expensive stock. However, the PEG ratio suggests some level of underpricing relative to sector peers. The PEG ratio of 0.78 factors in growth. Remember, it's price to earnings and growth. CRDO's growth metrics are extraordinarily robust, with the revenue growth projected at 55% and earnings per share growth at 183%, both significantly above the sector. Profitability, CRDO faces profitability challenges with an EBITDA margin of 5%, which is substantially lower than the sector. The net income margin of 2% also trails behind the sectors. This is a small semiconductor name. They're spending money to make money. CRDO's momentum is exceptionally strong with a 1-year price performance of 94%. Maybe it's run too far too fast. Revisions. Recent trends in earnings estimates are promising, with 8 upward earnings per share and 6 upward revenue in the past 3 months to 0 downgrade revisions. 0. Suggesting analysts are optimistic about CRDO's performance. And you can read all about the positives of CRDO and the concerns. Despite CRDO's impressive growth, analysts express concerns about its high revenue concentration, with 86% of Q3 revenue coming from Amazon. They are reliant on the Mag 7 spending. Wall Street, there are 12 analysts that cover this. They think it's an $80 stock. That's a 96% upside. And we can look at the momentum. Has it run too far too fast? The 3-month performance down 41%. Let's look at the chart. It's momentum that is bringing this name down, not fundamentals. And if we go and look at a long-term chart on this, okay, has it come down? Well, we just got the 50-day. We just hit the 50-day. Am I buying more of this? Absolutely. I bought some of this at 70. I'm going to buy more of this. When? When the 4-hour algorithm tells me. Because the 4-hour algorithm tells me 399% versus 298% buy and hold. It wins 48% of the time. I want to hold this one because it's the number one top 10 stock from Seeking Alpha for the year 2025. So I want to buy and hold this one. I want to buy when it's low. I bought at 71. Am I happy? No. Am I happy that I bought just a little bit? Yes, because I'm going to buy more. But when the 4-hour algorithm tells me to, it's about having a strategy. I knew this was one that I wanted. I know I want to own all 10 of the top 10 Seeking Alpha stocks for 2025. You are finding an opportunity to get in. Just find opportunities to get into good stocks with good companies, with good products, with good profits, with good earnings, and good management. And this is one of them. So I trust in that. And that's where I'm looking to buy. Okay? Cryptocurrency may likely remain under pressure. JP Morgan cited cryptocurrency may remain under pressure in the near term in a recent research note. Central banks around the world have also been apprehensive, while Singapore has rejected cryptocurrencies as being incompatible with its long-term investment strategy. Swiss National Bank and Central Bank of Poland have rejected Bitcoin as reserve assets. Trump is pumping this up because people have gotten him in. I am a long-term buy and hold person on this. I learned my lesson. Yes, I'm down on my investment on this overall, but I didn't go balls deep. I started just a little bit. And so I want 1% of my total portfolio into IBIT. And I think I'm at like 0.3% right now, somewhere in that neighborhood. So I'm down, but I'm going to buy more. Now, IBIT, unfortunately, only has like 1 year of history. And you can see, where's that 1 year taking us? Well, look, you've broken down here and we're even going down further. The algorithm had you in at 51. I bought more at 51. Am I upset? It's at 46 right now. And when you look at a weekly, you don't have a lot of candles. That's the problem, is with this one. So if we go over here to the Bitcoin and crypto list, I can go over here and I include this for you. The 4-hour algorithm in Bitcoin makes you 21% over the last 5 months. Remember, this trades 24-hour periods. So if you bought and held, you're up 27%. If you just buy with the 4-hour algorithm, you made 21%. I trust this one. And so I'm going to buy more IBIT when Bitcoin tells me to buy. Right now, it's not telling me to buy. And so I want a strategy, and I find a strategy that works. It's strategies. That's all it is. Are you going to be right 100% of the time? No. I mean, we can go and look at a weekly chart on Bitcoin, and you can clearly see this old resistance at 72,000 should provide us some support. Bollinger Bands are cinching up. The weekly, the MACD still not down. The RSI in no man's land at 46. So make sure you have a strategy to understand what you're doing. If you don't have a strategy, get one. Okay, you've seen me use Trendspider. Trendspider is part of my strategy. The other portion of my strategy, it's two things. It's Seeking Alpha Premium and Alpha Picks. Alpha Picks, Steve Kress has addressed it. Alpha Picks is a data-driven portfolio with 2 stocks per month. Okay, since its inception, which was July 1st, 2022, Alpha Picks is up 128%. This was up somewhere in the neighborhood of 200% before we started to see these pullbacks. And many of these stocks have seen significant pullbacks in the last 30 days. And so it may feel like you're down. It's a long-term buy and hold strategy. These stocks that have been taken down, it's been the momentum factor. Remember, when you go over here and you look at the quant, There's valuation, there's growth, there's profitability, there's momentum and revisions. It rates stocks based on that. It's the momentum that's taking the market down. And a lot of good stocks like CRDO, where their momentum, it's still an A+, but you can see as we get to that 6-month performance and that starts to come down, that grade is going to change. If we have a return, again, if we have a return to a prolonged extension down. So make sure you have a strategy. And again, this bundle, which is premium and alpha picks, you can get it on Linktree right down here. It's part of my strategy. I want to own good companies. Okay. And we can go over here and we can see the top stocks and we can say, oh, look at this one. ALIZY. It's a strong buy in the quant, 4.98 out of 5. Well, look at how it's going up. Look at it over the last month, 13%, while the market's been going down. Okay, top stocks. Let's look at Mind Technology. This is part of the psychedelic drugs. It's not in it's energy, oil and gas. I don't know what they do. I thought this was the drug thing. Provides technology to oceanographic, hydrographic, defensive, seismic, blah, blah, blah. I don't know what the hell they do. Short interest, 2.63%. You can see it's ran it all the way up to 10. It's now down at 6. So let's go another top stock. Let's look at, Celestica. This one, it's an alpha pick. It's a strong one. Again, it's a strong company. The valuation, not overextended. The growth, fantastic. Profitability, great. Momentum, A+. Because it's gone up so much. It's down 7% in the past 3 months. I own this one. I own a lot of this one. Am I happy owning it? Absolutely. The fundamentals speak to this one. It is getting brought down with the momentum in the market. It's the sentiment that's taking this one down. So I want to own that. So that's why I love this premium and alpha picks. It can bring me the best of both worlds where I can look at a chart. And we can go and look at Celestica, CLS. I can go and look at this chart and it says it's just become great. When do I want to buy it? I'll buy it on the 4-hour algorithm. You want to know why? Because over the last 2 years, it makes me 400%. You can see it right down there on the screen. So I want to buy it on the 4-hour algorithm. Am I okay buying it on the? Absolutely. Look, on the weekly, it's still a bit stretched, but the RSI is at 44. At some point, this comes up. Fundamentally, it's not expensive. Those are the ways that I'm managing my portfolio. So if you have any questions, you can hit me up, okay? For the paid members, if you're not a member of the newsletter, right here, Substack, okay? dailystockpick.substack.com. I will be doing a bonus podcast today. I will be go over 10 stocks from Morningside that are to buy right now. We'll go and look at those using the tools that I have. We'll look at Oracle. And we'll look at one stock that I think is a buy that could provide some pop on earnings this week. It's a risk. It's a risk, but I'll give you my thoughts. It's oversold on the daily. The MACD is down below the oscillator. If you get this stock under 75, I think it's a good gamble. And we'll go over Broadcom as well. And then the 10 AI. If I figure it out, I may go over the 10 AI prompts, but that's probably tomorrow. Okay, if you have any questions, again, you can hit me up. Linktree, my email address is up there. Substack, you can feel free to chat with me in the chat. Anything that you want. If you have any questions, hit me up. Okay, see you, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.